This is more bullish news for everything across the board. Actually, the equities, real estate, metals, precious metals, silver included. But it could give a quick boost to silver just in a short term. Just in a short term because of this is good news for the euro. The world's central banks are acting in concert to ease market strains. This article was just posted about 5 minutes ago or 10 minutes ago. It was at 2 p.m. on November 30th, Wednesday, 2011. The central banks of the wealthiest countries trying to prevent a debt crisis in Europe from exploding to a global panic swept in Wednesday to shore up the world's financial system by making it easier for banks to borrow American dollars. So stocks, that's what the stocks all rose up. The Dow Jones Industrial Average shot up more than 400 points, and we know silver jumped up a heck of a lot today. It's steadied out a little bit because, as you know, traders will take profits when there's a move upward. The stock market rose more than 5% in Germany also, and more than 4% in France. So the European Central Bank, which has been reluctant to intervene to stop the growing crisis on its own continent, was joined in a decision by the Federal Reserve of the United States, the Bank of England, and the central banks of Canada, Japan, and Switzerland. And China, which is the largest economy in the world after the European Union and the United States, reduced the amount of money its banks are required to hold in reserve, another attempt to free up cash for lending. So this is something Mark Faber was saying. He didn't say this exactly. Not that he's Karnak of the world, but he's very, very, very good. I mean, obviously he's an individual that doesn't know everything that's going to happen, but he's the best source. But he says they were going to print money. That's why he's holding on to his gold. But in the case of smaller investors, it's much better to hold on to silver. Because, as I was pointing out, I guess maybe it bears repeating, is that the biggest wealth in this world just has too much money to move into silver. There just isn't enough silver around, and especially at this price, it would be gobbled up. There's 100 million ounces basically available in the year for coins and things like that. So, for coins specifically. So they just could not move into the metal that easily. They have too much money. So in the case of like Mark Faber, he was alluding to this. They will print money. They'll print money until whatever, it just blows up or whatever it happens. And that is something we can put a little faith into. What Lindsey Williams says, the game they're playing is to get everybody in debt, countries, nations, states, local governments, individuals, businesses. So the people in the top that are holding the strings, that are holding the loans, they're going to come in and buy up everything for a song. So this is actually good news for the metals. And if you're holding silver, you should be buying more. You saw the price explode a little bit this morning. I know around that 33 level, there's been a lot of resistance in that price level, but considering that QE3 is coming up around the corner in the first quarter of 2012, and they're estimating approximately $800 billion to be spent on QE3, and that includes buying up the mortgages and also the government buying its own bonds. So once that happens, I mean, in anticipation of this happening, there's going to be movement up in the price of silver. So, as we can see, this story just came out today. So they're doing everything they possibly can to repeat a catastrophic collapse like happened. Well, that maybe wasn't the catastrophic collapse as happened in 2008. And the banks are acting exactly as Mark Faber predicted. So I got a lot of faith in that guy. And so hold on to the metals. And if you thinking about buying any, now's the time to buy them. I know people have been saying that forever and a day, but this is me saying it. I can't see them doing. I can't see a pullback. I can't see a pullback, like some serious pullback now, because looking at some of the people talking about a pullback in silver, to 25 to 26 or whatever. Looking at what they're doing right now, this is proof that they're not going to let the markets fall, and they're going to do everything they possibly can. So when something does finally go wrong, it's going to be some years down. Well, I don't know if it's going to be years down the road, but it's going to be down the road sometime. It's not going to happen in the next few months or anything like that. And maybe it'll happen at the end of 2012. Maybe it'll happen in 2013. Then there's going to be a catastrophic crash in the markets, more than likely. I keep suspecting that, and I keep looking at these oil prices. They're still about $100. But if oil went up to $150 to $200 a barrel, and that it was due to tensions in the Middle East or some type of war, which seems to be pretty much a no-brainer now that something's going to happen, that will crash the markets. And not sure what that would do to the metals prices, but looking at today, and looking at indications that they're going to have a meeting in the Euro regarding, what they're going to do as far as restructuring debt, or maybe getting together to sell the bonds in a different way. That's going to happen on December 8th and December 9th, so there might be more resolve with the Euro problem. So as I was thinking, a lot of people were panicking that the metals are going to crash down even further because the euro is going to crash and there's going to be a big meltdown in the stock market. That junk was wrong. And Mark Farber, he's been predicting that the stocks are going to stay pretty steady. That's the gist of it I got out of him. He says that the super bears or the super bulls will both be disappointed. And it kind of makes sense to me in this respect, because the central banks are watching inflation. They're not going to do, they don't want to do too much of this quantitative easing or interfere too much in the markets. They want to do it only in pieces as it's necessary. So, but it looks like, things are starting to look very, very bad. So now they're intervening, and there's going to be more intervention. So the euro is not going to fall apart right away. And do assume that we're in for the bottom for the metals, and this just happened within the last 30 minutes or so. World central banks are acting in concert with each other to ease market strains. So do expect no catastrophic problems in the markets or the euro in the near-term future.